Hello, welcome to this members overview of the early stage innovation company package included within the ESS BizTools advanced package. I hope you're having a wonderful day. I'm Peter Towers, Managing Director and founder of ESS BizTools. If you have any questions during this webinar, can you please type them into chat and I will answer them later on in the webinar. But if you're watching this webinar at a time more convenient for your firm or for you as an individual, and you come across any matters that you'd like some clarification on, please send me an email, peter@essbiztools.com.au. It's peter@essbiztools.com.au. So today we're going to look at the early stage innovation company. This legislation was introduced about 8 years ago when Malcolm Turnbull was the leader and Prime Minister, leader of the Liberal National Party government. Mr. Turnbull had a history of investing in young Australian companies. So I think he had a lot of sympathy to the problems that young, innovative companies have when it comes to raising capital. So this legislation, I believe, is very unique. It's the only time that I've encountered whereby the Australian government has paid an initiative type payment, an incentive payment to investors to invest in a small company. Yes, the government actually pays an incentive. So the benefit for a small company in using this legislation is that they have been given special treatment by the government to reward investors who invest in these types of companies. So I'm now going to go to our website and we will bring up the ESS BizTools website onto your screen, so you should be able to see that now. And on the left-hand, so I assume that you're familiar, but I'll just quickly do an overview. We're in the members area of ESS BizTools. You have passwords to get access to this as a subscriber. We've got the 4 main packages: financial forecasting, advanced package, starter package, and advisory intro. And this is the summary of products that are included in the advisory intro package, which is the largest package. It's the top of the tree. It includes everything that's in those 3 earlier packages and then additional information. So there's a fair bit of information there, as you can see. So we're looking for early stage innovation company. So all you do to access it is click on Get Content. What you have there is a introduction that I prepared. So we'll click on Download Content so that you can join with me as we work our way through this process. Now, in every package within ESS BizTools, there is a procedure control form, which is this one here, BAS B029, procedure control form for the early stage innovation company. You see our system's identified it's popular because everyone that goes to this site should be checking onto that form. Within the packages, then we have a range of forms that starts with the briefing documents for consultants. This work involves business plans, projective financial accounts, predictive accounts, budgets, cash flow forecasts, etc. And invariably, there's work to be done by an external consultant, besides yourself, of course. And I found over the years it can be rather frustrating, when you're dealing with a market research consultant or an exporting consultant. I think you need to brief them as to what their report's for, where it's going to be used, and when you require it by. So we've designed briefing documents because I use them in my consulting business. I use them quite regularly when the clients agreed that an external consultant is going to be involved. It's very important that all of these reports are all synchronized. I had a situation 20 odd years ago when I was consulting to the federal government in a major program, COMET, Commercializing Emerging Technology. And we were there as the advisors, all private enterprise people, I might add, to assist the company to become investment ready, to be able to raise capital under Section 708 of the Corporations Act. That's all we had in those days. So we didn't have early stage innovation company, and we didn't have crowdsource funding equity raising. All we had was Section 708. The company could raise up to $2 million from a maximum of 20 investors. And my role was to go through with the prospect. If they looked like they had the goods, they knew what they were doing, they had a good product that was very innovative, we would then get them admitted to the program, and the program would pay up to $250,000 for the preparation of documentation, business plans, budgets, cash flow forecasts, vision documents, and a whole range of, and actually helping the products to be proven. And part of my role was to train the CEO to be able to make presentations to potential investors, a 10-minute presentation, and answer some questions. Sounds easy, but there were some challenges. And one of the challenges was that the client was able to introduce who they thought could prepare the business plan and the market research and proof of concept comments by someone that understood the technology that was being used. And on one occasion in particular, the client insisted that one person was going to do the market research document and the other one was going to do the business plan. So at the time I said to both of these consultants, you need to meet and understand what you're doing. I think the market research has probably got to get done first, and then the business plan is prepared, but they have to be synchronized because we are going to take these documents to the market to try to raise capital. And at that stage, we had in mind about $1 million in capital was going to be raised. So I told them that, $1 million worth of capital. And when I got back the documents for me to assess them, basically to decide whether I was going to recommend to the government to pay the consultants for their work, and obviously to get the documents synchronized so I could then train the CEO to be able to make the presentations. I thought I was reading about two separate businesses, because the market research had all sorts of claims in it and projections. And when I read the business plan, it was on a different plane altogether. So I contacted both of these people and I said, well, I suggested to you that you had to make sure that the business plan followed on from what was in the market research document, because that's what's telling you is available in the marketplace. And the answer I got from the guy that did the business plan, well, I disagreed with the market research document, so I did my own. I said, you did your own. Have you got your own market research document? Oh, no, I just made some assumptions. I said, so this is very unsatisfactory because I've got to take a set of documents for this client to be able to make a presentation to a room full of investors. And there might be 70, there might be 100 people in that room. And the market research document that is going to be tabled as part of the documentation is saying completely different things to what's in the business plan. So you need to try to control this. So out of that, I designed these briefing documents. We'll show you one of them in a moment, just to try to make sure people understand how all this is getting fit together. I know there will be disputes at times, but hopefully consultants can sort that out and come to an agreement as to what they're working with. We have, so there's a number of those briefing documents, as you can see: market research, export market report, marketing plan, the management team, the working prototype. Very important when you're dealing with someone that's developing new technology, new innovations. If they're trying to raise capital, because you need to have a document that will convince potential investors to put their money in it. Is it as good as what the CEO is going to claim it is? And then we got the ESIC calculator, which is the most important document. It's called popular for a very important reason. I hope everyone that looks at the early stage innovation company looks at this document. We designed a spreadsheet that gives you a complete summary of what is happening in this early stage innovation company process, which I'm going to go through with you very shortly. And then there's the documentation relating to self-assessment. And I'm going to talk to you about self-assessment, and I'm going to talk to you about the principles test very shortly as we go through this. So what I'm now going to do is go back to and bring up the calculator. Okay, so we've now got the calculator on the form and on the computer. I'll just get back to the beginning. Okay. The calculator is there to try to decipher the rules that relate to early stage innovation company. You need to know the name of the company and names of its 100% subsidiaries and its Australian company number. And then we need to know the date that you're doing this assessment. That's known as the test time. The date of incorporation is very important. There are 3 different thrusts on ages of companies for early stage innovation company. The first group of companies is under 3 years of age. So obviously, date of incorporation is very important. The next group is company under 6 years of age. There's some different requirements there. And then there's a company that's only just been registered. So we'll just work our way through this. So you insert the date of incorporation. So this sheet is designed for you to use with your clients. And then we've got to supply some financial information. What was the total income in the income year before the current year? So it's obviously the year ended 30th of June 2024 if we were doing this exercise today. Now that income includes any grant funding, but if you received any funding from the Accelerating Commercialisation Grant, you can deduct that from the total of total income. So that's why you're recording it there, total income, including grant funding. Because the rules say that to be eligible for the status of an early stage innovation company, your income excluding accelerating commercialisation grant funding has to be less than $200,000 in the financial year prior to the current year. And it also asks you then to identify the total expenditure. The total expenditure has to be less than $1 million in the financial year before the current financial year. So then we go into the test time determination with the company under 3 years of age. Was the company incorporated within the last 3 income years? If it was, you'd answer tick. Did the company and its 100% subsidiaries incur total expenses of $1 million or less in the income year before the current year? Yes. If yes, what was the total expenditure item shown on the company's taxation return? So the tax office want to be able to cross-reference this. So you can't tell one story on this declaration, and even though this declaration doesn't go to the tax office, but the end result of it does. And so we have to coordinate to make sure that what you're claiming as expenditure is exactly the same as what's been included in the company's income tax return. Then we move on to income. Did the company and its 100% subsidiaries have a total assessable income of $200,000, excluding any grant funds? If yes, what was the total income? Take off the cell rating, so we do the calculation. Then there's another question. At the test time, which is now, were any of the company's equity interests listed for quotation on a stock exchange anywhere in the world? So if you've answered no, that's the end of the under 3 year test time determination. So we can tick that box. We would qualify on the under 3 years basis. The next test time determination is for a company under 6 years of age. Was the company incorporated in Australia within the last 6 income years? Latest being the current year. And across the last 3 of those income years, did its and its subsidiaries incur total expenses of $1 million or less? And the total expenses declared in the company's and subsidiaries' income tax returns then have to be disclosed. So we've got to reconcile again back to what's been shown in the income tax returns. Did the company and its 100% subsidiaries incur total expenses less than $1 million in the year before the current year? If yes, was the total expenditure under $1 million? They then ask the same questions as the 3 years about the income being less than $200,000. And they ask the same question about the not listed on a stock exchange anywhere in the world. So the company can pass the under 6 years test, which is slightly different to the under 3 years test. And then we got the third one, which is registered on the Australian Business Register in the last 3 years. I can only assume this is for companies that were developed some years ago but were never registered. Was the company registered in the Australian Business Register within the last 3 income years? If yes, enter the date of registration. Did the company and its 100% subsidiaries have expenses of less than $1 million in the income year before the current year? If yes, what was the expenditure? And that will be reconciled with what's been declared in the company's tax return. And did the company have $200,000 income, excluding any accelerating commercialisation grant income? And was the company not listed on a stock exchange anywhere in the world? So they're the 3 tests that go on to determine whether the company has passed the test time tests. So I'm going to assume, of course, that you've passed. So you're then able to move into either the gateway test or the principles test. The company selects which test it wants to go to, and it can do both of them, and then utilise the one that it's happier with. The gateway test is a self-assessment test at this stage. Ultimately, all the documentation has to be available to be submitted to the tax office for review. But you can go through this process, and if you pass the gateway test, and I'll show you how you do that shortly, you can then start discussions with investors. Within ESS BizTools, we've included a range of forms, as you saw when I gave you that brief overview, because every step needs to be documented. Because there's probably a group more powerful than the tax office you need to satisfy, first of all, on the gateway test, and that is the potential investors and their advisors. And because this is self-assessment, they're going to be very, very careful to make sure that the self-assessment process has been done correctly. And this is why it's so important, if you're advising clients in this area, that you really understand this process. Because I think this is a great opportunity for young, innovative companies to be able to raise capital, because there's an inducement that I'm really going to show you shortly. So the first question is, at least 50% of the company's total expenses for the previous income year was research and development. And if they did that, they earn 75 points. So if the company's expenditure was $500,000 for the year, and research and development expenditure that was claimed as such in the company's income tax return was $265,000, more than 50%, they earned 75 points. And what I haven't told you yet is, under the gateway test, the company needs to earn at least 100 points. It can earn as many above 100 as what it can, but it's 100 points it has to earn under the gateway test and be able to substantiate it. So the first level of substantiation here is that the figure that you're going to claim here has to be the same figure that was inserted into the company's income tax return for research and development. You also then have to document that in the documents that we've got drafts of that you would be presenting to potential investors. The second question relates to if the expenditure was between 15% and 50% of the total expenditure, they earn 50 points if that's their situation. And again, it's got to be documented, and the amount that's been used as research and development has to be the same amount that was disclosed in the tax return. Has the company ever received an accelerating commercialisation grant? Now, it says ever, and bear in mind these companies are under 6 years. Some of them are under 3 years, so it's very recent, but it doesn't have to be the previous year. So have they ever been received an accelerating commercialisation grant? If they've answered yes to that, they will earn 75 points. So if they've had more than 50% of their expenditure on research and development, 75 points. If they've been admitted to the accelerating commercialisation grant, they earn 75 points, 150. They had to give 100. You needn't go any further. You might want to, just out of curiosity, but that's the situation. The next round of questions is, has the company ever completed an accelerator program? These are programs that are authorised by Oz Industry that business consultants are licensed to present. And if your client's been admitted to that, and we can produce the statements, so then we start going through all the documentation that's going to be required. There's going to have to be a statement received from that program, confirmation that the program provides the sort of support that entrepreneurs need, which is specified in detail in the documents. And it's provided to entrepreneurs that are selected, and there's a few things there. And if your client will satisfy that, they will earn 50 points. So again, if they've got the research and development over 50, or even just 50 15% to 49.9% of their expenditure. They earned 50 points. They could earn another 50 points here. Here's their 100 points. Has a total of $50,000 at least been paid for equity interests by the company? The shares in the company, not to associates. So and there's some details there that we can supply because we need to list the shareholders' names, how many shares, when did they pay. So all this can be, needs to be documented so that the investors can see how this has happened. But more important, and just as importantly, so that the company has a file for when the tax office asks for it, because this is self-assessment. Has the company declared? Oh, okay, so that's all part of that. If the company has registered a patent on a standard patent, or the owner of a plant breeder's right, they will. You've got to supply details, and they will earn 50 points. Has the company applied for an innovation patent or a registered design? Again, you enter all the information and they will gain 25 points. And if the company has a written agreement with an institution under the Higher Education Funding Act or the Industry Research and Development Act, they will earn 25 points. So what our system is doing here, it's going through, you'd be entering your details. It would then total your result and tell you whether your client has passed on the self-assessment test for under the gateway test. So way back at the beginning, we said we were going to be looking at the gateway test, and the aim is to accumulate 100 points. Now, if you went through that and your client had only accumulated 80 points, it's not the end. We then move into the principles test, but if the company was very new, you probably haven't, or the company hasn't had the opportunity to get involved in those activities we've talked about there. A lot of the research may have been conducted in a partnership or a sole trader activity. So none of those claims were made through a company on the income tax returns. So to overcome that problem, the government introduced what they call the principles test. So there's 5 key questions. These are not yes/no answers that they're looking for. I think they're looking for at least an A4 page of supporting documentation. I've acted for a few of these companies, and a few of them would also commission some external reporting to be done on what their technology was all about. One of them submitted about a 28-page report covering these 5 issues. They got passed and accepted. So this is going to the tax office and Oz Industry for assessment. So it's not self-assessed. You haven't got any mandate to go to the investors and say we're an early stage innovation company until you get this assessment. Tax office told me it takes about 6 weeks to issue their approval. There's a small team working within the tax office that does these assessments. So the first question is the company genuinely focused on developing for commercialization one or more new or significantly improved, note those words, significantly improved, products, processes, services, marketing, or organizational methods? So it's covering quite a detailed list there. So you answer that. And the business, question 2, the business relating to these products, processes, or services has a high growth potential. High growth potential. And this is where a marketing expert can come into play. High growth potential. Can the company demonstrate that it has the potential to be able to successfully scale that business? So grow it, take it to other markets. Can the company demonstrate that it has the potential to be able to address a broader than local market? So if your client's product has only been developed to service the Sydney market, that's not the broader than local market concept that the legislation is looking for. It is great if the product could be exported. That's really what I believe the government is looking for. And can the company demonstrate that it has the potential to be able to have a competitive advantage for that business? Competitive advantage. So what you do is you complete the form and you are able to submit that to the Australian Taxation Office with a whole range of other documents. So that's the process. The gateway test is the self-assessment test. You earn 100 points. Make sure you got the documentation saved. The principles test, you answer the 5 questions. You submit your answers to the tax office, who liaise with Oz Industry, we're told, and come back with an answer. So they issue a certificate. So under the principles test, you actually get a certificate back that the tax office has accepted XYZ Proprietary Limited as a company that's met the status to be an early stage innovation company. Okay. I'm just going to move back and go back to where we were in this process. So I've talked about a few things there before, so we'll go and have a look at a briefing document. So computer's decided it doesn't want to play. Sorry. Okay, so here's a sample of the just got to get this form fixed up. So we need to share the document. You should now be able to read the briefing document. My apology for that bit of delay there. So this is the one I've actually clicked on is the market research and validation. So this is a form you would send to the consultant doing that part of the work. And some of this work could be very important for the principles test, justify that what they've got in mind is something that's interesting and exciting. So we've got all the details of who's in it, and then primary items to be in the market research validation, market research testimonials, market focus group. Has there been a focus group look at it? Who are the competitors? What do you think the market is? What's the annual projection of unit sales? What's the SWOT? What's the milestones? When do you need the report? Draft report on a certain date, completion date, final report, how many copies you want? What do you got to cover in your quotation? So that's trying to spell it out so that we really get the information that going to be required by your client to make some decisions. Now, the next item I want to bring up is the Form 40048. That's that one here. Now, this is the form that we've prepared for you to complete if you're advising a company that's under 3 years of age. And obviously, they're doing the self-assessment. So they've used the gateway test, company name, ACN, that sort of. Now, this is so you've got a file, so you've got something that your client can be handing to potential investors. And this is to be signed by the directors. We hereby declare that we have conducted a self-assessment of the company's eligibility for the early stage innovation company. A certified copy of the certificate of incorporation, certification of the expenditure that was undertaken, including copies of the profit and loss account and the tax return, copies of the income tax return, proof of the income being under $200,000, how they've calculated the expenditure, so that that information is available for and we've got the statement by the directors. They're signing this and saying they believe it to be true. Because again, I will say, remember, under the gateway test, this is self-assessment, so you need the documentation so a file can be submitted to potential investors. Now, if your client doesn't want to do this, they probably shouldn't look to becoming an early stage innovation company, because this is going to require supplying a lot of very confidential information across to people who are only potential investors and to people who will, I think, want to show it to their advisors, to other people like you, of course, as accountants, to make sure that they agree with it. Because the investor's going to put money into this company in anticipation of receiving a incentive payment from the tax office, by the government, by the tax office. And as this is self-assessed, they're really relying on these documents to make that decision. Because once they've contributed the funding into the company, it won't come back if for some reason later on the tax office disputes that this process was all done legitimately. And as advisors, we need to be very careful about this to make sure this is all correct, because otherwise there could be some very difficult transactions that follow and repercussions. Just get rid of that one. Now, I also want to show you self-assessment under the gateway test. Okay, so here's the overall declaration. That first one I showed you, 4004A, was the eligibility under the test time, which was looking at their expenditure, their income. This one now is the document. So you need that. That's the first document that's needed. The second document, if you're self-assessing, you're using the gateway test. So we're now going through and saying, this is how we've gone. The qualification of the gateway test was achieved with 100 or more points achieved under tick the items. So you go through and tick which ones, at least 50% of the income. The total expenditure, sorry, was research and development, or it was under the 15 to 50% category, or they claimed under these other things. And what you need is the supporting documentation, which is there's individual forms for each of these items in the package you've got that you would complete so that you have a full file that supports every step of this, all the documents. Details of the shares that you earn $50,000, the rights, and the directors to sign it. And I always make provision for this sort of document to be signed in front of a JP. It's a very important document. The consequences of getting this wrong are not very nice. Now, if your client's gone out and could raise $2 million, these are basically Section 708 companies, and they're now going to be given a status of being eligible for the status of early stage innovation company. And the people investing are entitled to a financial reward. So that's that one. And we're going to go now to see, there's a lot of forms in this because you've got to cover a whole range of possibilities. Okay, we're now going to BAS 4040. Now, this is the principles-based test declaration. So bear in mind, this document's going to the tax office. You're not showing this to the investors at this stage. So the company directors are declaring they're genuinely focused on developing for commercialization one or more new products. But you would then have, and we have individual forms for each of these components where you've got to specify, that's why I said about an A4 page to each of these items, more if it's aiding the submission, and the directors again should sign it. So hopefully that's giving you a overview of some of the key information that's included within this early stage innovation company package. There's a range of forms there, as you can see. There's a due diligence file index. Then I'm going to bring up this form. Why will investors be interested in early stage innovation companies? So why will investors be interested in the early stage innovation company? So the investors receive a tax offset calculated at 20% of their investment. For sophisticated investors, the maximum tax offset is $200,000, which obviously at 20% relates to $1 million investment. They can invest more than $1 million into the company, but the incentive only goes to $200,000. A retail investor, the 20% that they can get is a maximum of $10,000 because the government had introduced a maximum investment amount for a retail investor in a company that qualifies as an early stage innovation company of $50,000. Now, this reward for investors is only for investments made at the test time. So those people who contributed the $50,000 that the company may have obtained a year ago or even 6 months ago, they don't get this benefit. It's the people who are the shareholders who are now investing. So that's the first part of it. So that's we deducted off the investors' tax obligations to the Australian Taxation Office. If the amount's not fully used in the next financial year, it can get carried forward until it's all used up. But also there's a capital gains tax exemption, which is what a lot of investors are very interested about. If the shareholder holds the shares for longer than 12 months, shares issued as part of the status process, holds those shares for longer than 12 months and less than 10 years, there is no capital gains tax, irrespective of what the tax may have been. If the shares are held for longer than 10 years, at the end of 10 years, the company can be revalued, and based on that revaluation, that investor has then got a new cost price for his or her shares, which is what the future calculation of capital gains tax is calculated on. So just to summarize that, the investor receives 20% of their investment up to a maximum of $200,000 for a sophisticated investor and $10,000 for a retail investor. If they hold those shares for longer than 12 months and less than 10 years, they don't pay any capital gains tax at all. If they hold the shares for longer than 10 years, there's a revaluation done at the end of 10 years as what the shares in the company are worth on whatever history the company then has. And that becomes that's the basis for the calculation of the new cost price for those shares going forward. But ultimately, in that case, there would be or could be capital gains tax payable. I hope this explains how the early stage innovation company activity works. Each of these companies is going to require a whole range of other documentation to be able to raise this capital. Whilst investors seem to be quite interested in a company that can meet the status of early stage innovation company, they want all this documentation, but they also want to see the business plan, the predictive accounting reports, the budgets, the cash flow forecasts, the key indicators, the projected balance sheet. They want to know the vision. They want to know who the leadership team are, who the directors are. They might want some representation on the board of directors. So all of that work also has to be prepared. And these companies, when they raise capital, really don't raise enough to employ a full-time chief financial officer at that stage. And they probably haven't got enough work. So for a chief financial officer. So there's a great opportunity for your accounting firm to be appointed as the virtual CFO and to continue to handle the CFO role and possibly the company director role for your client. So that's the overview of early stage innovation company. If you have any questions or comments on anything that you don't quite understand or how you get started, please send me an email, and I'll just go back to finish off. So training videos, all of our training videos are available within the members area of ESS BizTools. Just go onto at the top of that summary slide that I showed you before was where the training videos are. You can click on and watch a lot of videos because we've done a lot of training videos over the years. If you've got any suggestions for training presentations, if you think we could have presented this a little bit differently, please send me an email or give me a phone call, 0418 190 181. Or you can send me an email, peter@essbiztools.com.au, because we're very keen to make sure that our subscribers fully understand how these processes work. I'd like to ask you, how many of your clients you reckon you could talk to about early stage innovation company? Because prior to that, you should have been talking to them about research and development. It's research and development's the key area. Unfortunately, accelerating commercialisation grants have now ceased. The current government withdrew them, but the benefit of what I explained to you, if a company has raised capital grant funding as a accelerating commercialisation company, that still applies, but there's no new companies being admitted to that area. The government hasn't made amendments yet, as far as I can work out, to allow a couple of the other government programs to replace accelerating commercialisation, and we should be starting to put some pressure on the government and the opposition to ensure that that is corrected. So thank you very much for your support of ESS BizTools. I look forward to talking to you again when we present our next members briefing session on utilisation of the products within ESS BizTools. Stay safe. Have a great day. Goodbye. And thank you very much for being with us today.